in New York. It's up about 3% in the pre-market action after the home improvement retailer beat top and bottom line estimates for the fourth quarter. Lowe's earned $1.78 per share, 7 cents above estimates, and issued upbeat full-year guidance as demand for tools and building materials remained elevated. So let me just try if we have the guest once again. Brunel Rosa, CEO of Rosa Rubini Associates. Good morning. Do you hear us?
Yes, I do. And you?
Perfectly. Thank you so much for joining us. So I was wondering, how do you interpret the market's reaction after what we saw yesterday in terms of sanctions?
Well, volatility is abounding, of course, in markets because we are effectively at the beginning of a serious confrontation between Russia and Western countries, effectively, and of course, Ukraine is only the battleground at the moment, but there are so many other fronts open. Just want to make sure that kind of people understand that the idea that somehow there could be a quick de-escalation and the diplomacy will prevail in the short run is a bit far-fetched. Putin has a long-term plan, has a job that has started, if you want, in 2014 with the annexation of Crimea, and is not going to end anytime soon. Therefore, this increase in oil prices and this volatility in the stock market is absolutely justified and is likely to continue in coming days.
Well, let me just ask you, what's your take on the sanctions? Do you think that this is enough? Specific banks were targeted, Russian government debt was targeted. Of course, Germany suspended the Nord Stream 2 project pipeline, suspended temporary. Do you think that this is enough? Or as you said, like, since everyone knows that this is a long story that is just kicking off, this is actually not sufficient?
The situation is in evolution, and everybody hopes that eventually there will be a stop and eventually a de-escalation. However, you're not going to get there until things are not going to get better before they get worse first. But before they get worse, people are hoping that this measured approach will pay off. And that's quite unlikely. That's why they start with something pretty mild, selected banks in Ukraine and in Russia, and perhaps the Nord Stream seems to be the more impactful of all the sanctions that have been implemented. But again, first of all, I think everybody knows that the Nord Stream is going to be just temporary suspension. I mean, the pipeline is there. You just need to open the tap, and then the gas can flow. And of course, Germany has invested a lot also in terms of political capital to have that pipeline open. So it's been suspended. But there's clearly an asymmetry between the two sides of the contenders. Russia can move its tanks into foreign territory, and the West can at most threaten further sanctions. When the two sides of the equation are so unbalanced, clearly there's green light for Putin to move further until he will find some real obstacle. The problem is that it's not easy to define how the West can really intervene without also beginning some form of military reaction. And is something that nobody effectively wants.
I was wondering, do you believe that central banks and central bankers are supposed to consider the geopolitical tensions in Europe as an important factor and risk for the economic growth in 2022?
They will definitely consider geopolitical developments as one of the key risks to assess in terms of economic impact. But unfortunately, at the moment, the first impact before being on the economy is going to be on inflation, making things worse. Energy prices will increase further, and the supply bottlenecks will in fact be exacerbated. So before you see an impact on economic activity, you're going to see an impact on prices. And at the moment, central bankers are very much focused on the rise in inflation, and therefore it might in fact strengthen the case for a tighter monetary policy. Even if this is yet another, I would say, negative supply shock after the one that was provided by the pandemic, something the central banks are not actually prepared to deal with, because monetary policy works through the demand side, not the supply side of economic activity.
This is very important what you're saying. And final take, you said, of course, once again, inflation front and center. We saw the numbers of the Eurozone today. What are your expectations in the upcoming central banks meetings, both, of course, Fed and ECB, considering the situation?
For the Fed, they will probably perceive this evolution slightly too remote for them to be impacted. For them is another continent. There's an ocean between the US and Ukraine, so to speak. I don't see this becoming immediately a factor in the decision-making process. They've already pre-announced that interest rates will be increased in March, and so this is what will likely happen. The ECB might be slightly more cautious, but to some extent, they already had a more cautious stance than the Fed. They decided to stop PEP, and PEP will be stopped in March. And there they have APP being lifted up until October. The question is whether the revision in the forecast will induce a faster reduction of the APP, which is likely. Perhaps, I'm just saying perhaps, we'll see how things evolve in the next couple of weeks before the ECB meeting. If the situation gets much worse in Ukraine, they may then decide not to do anything and keep the schedule of the APP reduction as it is. If instead the situation improves slightly, they will probably announce a quicker reduction of APP purchases.
Thank you very much, as always, Brunello Rosa, CEO, Rosa Rubini Associates. Have a great day ahead and talk to you soon.
Thank you very much.